Welcome to Friday Takeaway. This week it is all about construction as we look at Gabungan AQRS and MRCB. But before that, although we try to set aside the circus surrounding the Trump administration and instead focus on policy, this week it was impossible after excerpts were published from a new book by Watergate journalist Bob Woodward that called the White House Crazy Town. And in an almost unprecedented move, the New York Times published an anonymous op-ed from a senior official inside the White House confirming that yes, their job is to corral their president, who behaves like a child. It all makes for great headlines, but worryingly, it distracts from the fact that a trade war is still looming and the implications from that are actually more far-reaching. And in that vein, this week was not a good one for emerging markets and their currencies, with a big sell-off on Tuesday. This resulted in Indonesia's rupiah falling to a 20-year low versus the greenback. Ringgit wasn't spared either, closing at a 9-month low during the week, but it managed to regain some ground yesterday as demand on the USD eased. This sell-off did spark fears of what some called emerging market contagion due to strong USD and oil prices, but analysts did say that the real issue is trader sentiment and that the worry is actually overblown because generally businesses are not that hurting that much. And lastly, this week, Malaysia and Singapore formally agreed to delay the construction of the KL-Singapore high-speed rail until the end of May 2020. Malaysia will pay 15 million Sing dollars for costs incurred. So the new commencement date is Jan 1st, 2031, compared with the earlier date of December 31st, 2026. During this period, the good thing is that while the suspension is ongoing, the two countries will continue discussions, which hopefully will result in something more affordable. Given the HSR is officially on the shelf, are there still buying opportunities for construction? First up is Gabungan AQRS that saw positive movement on its share price this week after its CEO seemed pretty upbeat about its prospects. Too upbeat maybe? Then we take another look at Malaysian Resources Corp Berhad or MRCB, which did stand to be the biggest beneficiary of the HSR and what they have to fall back on. So let's go in. Gabungan is a construction and property development company. Its name has been attached to projects such as MRT1, the Sungai Besi Ulu Kelang Highway and LRT3. CEO Dato' Azizan Jaafar said that earnings and fundamentals would actually get better from FY19 to 21, propped up by core construction, property development and its precast component biz. At the moment, order book stands at 2.4 billion ringgit, which will actually last the company fairly comfortably for about 3 years. And it is also positive on its property projects located in Puchong and JB. The company actually has a 5-year transformation plan for this particular division, which UOB Kay Hian had been pretty positive on. The shares also moved on the company's announcement that it would do a bonus issue of 123.65 million new warrants. Of course, fundamentally, a bonus issue changes actually absolutely nothing, but investors seem to like them. The share price has been moving, and if you want to look at the glass half full side of things, it is still not as high as it was 6 months ago, where it was around 1 ringgit 72 cent. Its highest, by the way, during that period was April, where it closed at 1 ringgit 77 cent. So if you believe the analysts, there is still some upside to go. LRT3's contract value is to be reduced by about 100 million ringgit because the government is cutting stations from the original plan as it tries to save money. So in a report, UOB said that earnings contribution from LRT3 would have accounted for about 35% of 2018 full-year earnings. Now, although the share price would have taken this in, more recently, Gabungan said that it would be bidding for construction work under the massive Pan-Borneo Highway and also through its precast biz arm. But the highway is to be delayed because a huge amount of money needs to be used for land compensation. However, that is not good enough for the government, who actually wants to do a probe as to why it is actually taking so long. According to Bloomberg data, the two most recent reports on Gabungan, positive, calling a buy with Macquarie having a target price of 1 ringgit 80, UOB, their target price is 1 ringgit 86. Malaysian Resources Corp Berhad or MRCB to its friends is one of the country's biggest construction companies. Best known, of course, as the master developer for KL Sentral, name also attached to some of the country's biggest projects including LRT3 and Kuasa Damansara. Of course, in early May, the dynamic duo of MRCB and Gamuda had accepted the letter of appointment from HSR to be the project delivery partner or PDP for the high-speed rail. This, of course, has changed, and with all the slashes and delays, it is too much of an uncertainty. Affin Hwang Capital called its First half 18 earnings disappointing due to poor property sales and losses at its infrastructure division, and definitely it came in below expectations, the numbers. So you win some, you lose some. And in this case, MRCB is still the PDP partner for LRT3 as confirmed by Finance Minister Lim Guan Eng, together with George Kent. Even though, as mentioned earlier, it will be a scaled-down version with tougher terms, a tick in the win column is still better than nothing at all. So Afin Huang still thinks it is worth a buy for sure, pointing out that construction earnings did see a surge of 168% as it accelerated billings for projects such as MRT2 and several other commercial projects. So actually, after taking a battering, the share price has actually recovered somewhat, as you can see. Taking in the shorter timeline of about 3 months, stock is actually up about 8% from where it had been there, around the 66 cent mark. In general, analysts are positive overall at MRCB, even with all that uncertainty, and the bulk of analysts are all calling buys. Highest target price that I can see is RM1.20. Only holdout is CIMB. They have a reduce on the stock, and the target price for them is 65 cent. Now, Afin Huang, they have a target price of 88 cent, FYI. They think that another potential catalyst could be the sale of the Eastern Dispersal Link, or EDL, possibly happening by the end of the year.